What's up everyone, it's Aleem here. In this video we're going to be walking through exercise 2.7, so let's get started. In this question what we're asked to do is we're asked to make some basic journal entries. So what we're going to do for each of these is we're going to read what we're asked to do, and then we're going to do the journal entry. In this one here it says on March 1st we paid monthly rent of $1,200. So if we're analyzing this transaction, we're going to look at the word paid here. The word paid means cash went down, right? We're giving up cash. And it's for monthly rent. So if we're doing this on March 1st, it's for the month of March, which means this is a cost incurred in running our business now. This isn't going to benefit us into the coming year or anything like that. We're paying for this month, which means our rent expense is going up and cash is going down. Now again, if we think about A equals L plus E, and I'll just draw this on the screen here for a quick second. If we think about A equals L plus E, and cash is going to go down. So we make cash go down by crediting it. So we know there's a credit to cash. And under equity, what we're going to say here is that equity is decreased by debits. And what are we debiting? We're debiting rent expense. Right? Because when we debit rent expense, we are decreasing owner's equity, and that's why it's a debit. Okay, so in this one here, if that's a little bit tricky to you, just remember A equals L plus E. You saw the word paid, which means cash went down, so you know your credit is to cash. So actually that makes it easy because then your debit has to be to rent expense. So even if you didn't remember which way it went, you can figure it out because you know cash. All right, our second transaction here, it says performed dog grooming services on account for $160. Two keywords here, performed and on account. Performed is telling you you've already done the work, which means revenue is going up. On account is telling you we haven't been paid yet, which means we are now owed the money. And if we're owed the money, what we're going to say here is accounts receivable is also going up. So we're going to debit accounts receivable. Remember, it's on the asset side for $160. We're going to credit service revenue for $160. Service revenue lives on the right side of the equation. And again, A equals L plus E means that we are increasing service revenue, and that's why it is a credit. On March 5th, again we performed dog services, but this time for cash of $75. Okay, so this is almost the same question. We know there's going to be a credit to revenue, but the debit this time doesn't go to accounts receivable because we received the cash. And if we received the cash, cash is going up. So again, performed dog services for cash of $75, we're going to debit cash and credit service revenue. Okay, let's try another one. In this one here, it says we purchased equipment for $300. The company paid. Okay, so we paid cash, which means cash went down, of $100, and the balance was on account. Okay, so here's an example of a compound entry. It said we purchased equipment for $300, so we know equipment is going up by $300. We paid cash, stop there, cash went down by $100, and the balance, whatever's left over, so 300 minus 100 is 200, was on account. So here what we're going to do is we're going to debit equipment, 300, credit cash, 100, and credit accounts payable, 200. Can I point at this stuff? Hold on, where would it? There. There. Okay, that's kind of cool. Moving on. On March 12th, we received cash. Stop reading. Cash went up. Okay, received cash from the customers billed on March 3rd. Now on March 3rd, we had billed them for $160. So here what we're going to say is debit cash for $160. And now the amount they owe us, because they've paid us, goes down. They no longer owe us the money. So cash goes up by $160, accounts receivable goes down by $160. Let's try the next one. On March 14th, let's try that again. On March 14th, we paid salaries. Stop reading. Paid. Which means cash went down. Paid salaries to employees of $525. So what is that called if salaries are paid to employees? Well, presumably we're paying them now. We're not prepaying them for work done in the future. So here we're actually paying for a cost of business, which means we have an expense. And that expense here is called salaries expense. So on March 14th, we're going to increase salaries expense for $525. And that's because our employees have already done the work. It's not because we paid the cash, it's because they have already done the work. And this is going to decrease owner's equity, which means we're going to increase salaries expense to decrease owner's equity, and that's why it's the debit. We're going to credit cash, which means cash is going down. On March 22nd, we paid the utilities bill of $172. So here, utilities expense is going up, cash is going down. Okay, and again, the key word there was paid, which is how we know cash is going down. On March 26th, paid $220. Again, stop reading. Paid, cash went down. Okay, so we know the credit is going to be to cash. What do we call plumbing repairs? Probably something like a repair expense. So here on March 26th, we are going to increase or debit repairs expense for $220. We're going to credit cash for $220. On March 28th, we paid, cash is going to go down, the balance of the amount owed from the equipment purchase on March 8th. And how much did we owe? I think we paid $100 and now we owed $200 more. So here cash is going to go down by $200 and accounts payable is going to go down by $200. Remember, accounts payable is a liability and it was initially set up in the credit position. We owed the money. But now what's happening is we've paid the money. Cash is going to go down and we have to get rid of that liability, which is why we're debiting accounts payable. All right, last couple of things here. March 30th, we paid $1,800 for 6 months of insurance in advance. So the keywords here are 6 months. I'm not going to dwell on paid. We've already been there. Of 6 months of insurance in advance. So we're paying for it ahead of time. Cash is going to go down. Now, what are we getting in return? We're getting insurance that's going to last us for the next 6 months. So that's an asset, right? It's something that occurred from a past transaction. We just bought it. It has a future benefit. We're insured and we control the benefit. It's our insurance. So here what's going to happen is prepaid insurance is going to go up. So we debit it. Remember, it's an asset. And cash goes down for $1,800. All right, guys, I hope that was helpful. Thanks for watching.